It's one thing to manage your father's money. It's one thing to manage your own money. But when you manage third-party money, right? And we've seen both sides of it. We've seen fund managers who think third-party money is for play, or some fund managers who think third-party money is a responsibility. And what you have said is that this is a responsibility for me, that I have to return 1x. And then uske baad, I may not be able to give you a return. I may not be able to beat other assets classes. That's fine. But I will always return back principal, and then we'll take a discussion on the returns. Is this a mindset that you got from somewhere, or it's something that you felt when you've given money to other fund managers?
So Anirudh, I would say this comes as probably a trait of my upbringing. You should not be very casual about taking money from anybody. Coming from a professional family background, I saw that, how different businesses, how they have shaped. And looking at listed equity markets, especially where founders have taken money from the bank and then they actually, did whatever they did and all that is there publicly, it carried a very bad name to the family. So for me, it was something like that. I don't want to take a name in such a way that tomorrow, if anybody is taking my name, he should say, "Arey, usne paise duba diye."
Correct.
So I was never okay about it, despite being such asset class, which is supposed to happen. But I took that as a challenge. I thought that if you have a mindset, then only you can do it. Exit doesn't happen because you wrote that in SHA. Exit happens because you have the intent to do it.
Correct.
So ultimately, I have that intent right from day one. And that is the reason why it happened also. So I'm proud to say that we have done it. And of course, we are sitting with good profits to eventually give that also to our investors.
In terms of DPI, I think you're more than 1.5x.
Yeah, we are close to 1.4 today.
And that's in a period of 5 years, which is brilliant.
So performance-wise, thoda hum log rehte hai ki we don't want to boast too much around. And second, that you have to get a right platform also. We both understand that everybody is chasing a certain size. Unless you're not $100 million fund in the country, probably you're not a fund manager only. So that's the impression I get from, unfortunately, in our ecosystem.
Somehow the ranking systems are very different, that what is being chased and what we think should be chased.
For me, I think whatever we have done so far, we are quite happy about it. And that principle is still there. So that helps, because when you're making that investment, you're also looking the same thing to the founder.
Correct.
Whether you are going to return the money in paper or in reality, you have that intent. I would say it's very, very difficult thing.
And sometimes things don't work out, right?
Yeah.
The world changes so quickly. If you look at something like what happened with ChatGPT, it's affected so many businesses in one shot, right? And wiped out entire margins altogether.
See, when a founder is down, that is a time actually you get to see the real founder's intents. When things are riding, everybody can ride higher and you can have different things for having that high. When things are down, that is a real testimony of the founder, how he is doing. So we are okay if the company is not doing well, but we are not okay in that condition how the founder actually, thinks the other way around. That examples are also there with our portfolio companies and also
in everyone's portfolio.
Yeah. So but we try to always learn and minimize that part as a risk. Rest of the risk always remains. So we can't control that.
So let's talk about the star company, Everest Fleet.
We both have that. Very Siddharth.
He's coming in a future episode. By the way, also a member of the Young Funders group. Yeah,
yes, that's how we both know him.
Yeah, we both know him. And a very interesting investment, because I think when we made the investment, I'll just talk about from what our LPs thought. A lot of conversations at IC level, at LP level, we are investing in a fleet manager. How will this ever make us money? Right? This is not a startup. It was a very difficult sell. One of the few places where maybe vetoes were required. We're going to veto this. But he's done it. They were definitely delivered a tech product. How was it for you? Because there's no way to hide what they do.
Correct. Absolutely right.
Highly operational business, heavy on capex. I remember March 21st, 22nd, country goes into lockdown. March 21st, the biggest problem faced by Everest was where to park the cars. There are 600 cars to park. Where to park them? How did you sell that internally to A, to yourself, B, to the IC, and C, to the investors?
See, one thing really helped me. I was never biased to anything. A lot of people who had done their first fund were very clear with the ideology of investing only in tech startups. On the contrary, I was very clear that my thesis were never like, I will only invest in tech. So that is the reason why, naturally there was no filter to say that, okay, this is a fleet management company, so should I not? In my personal portfolio, there are companies which are non-tech and they have done really well for me. So I never believed that kind of thesis that only a tech would change the world. I think so what changes the world is the entrepreneur, not the technology. Second thing was, since we knew Siddharth right from the beginning, we knew his little bit of understanding and experience, understanding the ecosystem. So that was one thing. Third, product market fit. I think so, but at that point of time, he already had 150 cars, which he demonstrated that this business can work. And we clearly could see that Ola and Uber, that point of time, both of them were quite there. There were always some kind of episodes happening in different parts of the country as far as some sort of strikes from the driver.
Correct.
So when we were discussing with Siddharth and we just felt that, what exactly are going to change here? So he just categorically said that, listen, everybody is owning maybe around 10 cars or 15 cars each, and they are putting it to Uber system. For Uber, it's very difficult to manage so many, fleet managers as individuals. So we become the consolidated guys. Then I felt that again, you will become, one of the aggregator sort of guy, where then again, you will have that advantage. And that's where the difference came. He said, I will not become aggregator, I will be the owner of the asset.
Correct.
And the ownership lies with me, and the driver would be on the incentive basis, on the structure. Therefore, this is the way how I'm going to be efficient. And considering I'm going to have all 100% CNG cars, then my cost against diesel and petrol, I will be always cheaper because there is no other alternative
Very
fuel.
clear focus on.
And the margins were clear that you are talking about 22% onwards EBITDA margin. And that was demonstrated while he was doing that business of 150 cars. So that was good enough for me, right? And plus the intent. When we were investing, I was also in the same doubt. With, of course, every investment you'll have some kind of doubt to be created. It is never like easy way out. Siddharth, I asked him that, yaar, what exit aayega na? I'm like, yaar, I'll get you the money. You would not have this trouble. I'll make sure that I'll get you the exit and you will make money here. Then he asked me this counter question, ki Abhishek, what is your expectation? And back then, my idea was that at least I should succeed with more than 50% of my portfolio getting survived. And agar 5 guna bhi ban gaya to bahut acha hai, because markets were not that rosy. I told him ki main 5 guna ban gaya to bahut acha hai. Siddharth, like looking here and there, he said, dal do.
In his traditional style.
And ठीक है, मैंने डाल दिया.
But and let's a little bit deeper, because Everest is a very unique founder quality also, right? I think second generation founder as well, and also somebody who comes with background, right? The first 50, I think first 200 to 50 cars were pretty much bought by him on his own balance sheet. So it wasn't somebody you were talking about that, oh, you are coming out of college and you are, for the first time you're making a company. He had the knowledge.
Absolutely.
And he had also a bit of entrepreneurial arrogance that was right. The right kind, right? I've seen the other kind also. I'm just saying the right kind of arrogance that he had, which was that he had that confidence.
Yeah.
The arrogance that came from a very deep level of confidence that I can make this happen.
Yeah.
And therefore the advice you would give to Siddharth, right? Was very different than advice you would probably give to anybody else. And how did you manage the intricacy of that chemistry? Because Siddharth is not, let's make it clear, he's not a very easy entrepreneur to deal with, because he's extremely confident, and today if he wants he can buy us out today himself, right? So you have to play that always in your mind. You're not dealing with a founder who does not know what he's doing.
And it's very simple. On this show, this is a learning, guys. This is for you. This is for you. Please note this. Advice मैं देता ही नहीं हूँ. I told that. So I never have to deal with
advice. I'm talking more from the angle of, you're a board observer, you've been on the board of the company, and in many cases he needed us to come and step in when, for example, when COVID hit and suddenly you have zero business and you're also owing so many loans.
Yes.
Not that he could not pay. I'm just saying that there was a very difficult moment to
Correct.
Different set of problems that he's facing than everybody else is facing. Plus a proud company, profitable, right?
Profitable, guys.
Profitable.
Venture capitalist in this episode talking about profits. That's true, by the way. It is possible.
5 years in a row he's been profitable, and that year also he was profitable.
Yes, he was.
And to see that go to zero right before the end of the year, we were discussing profitability for the year, and April 22 he's like no business, right?
Yes.
April 1st we are completely down to zero. To his credit, sticking to it, figuring out some business models in there. But that intricacy is very different than, let's say, if you had the founder of some other company coming in, and I won't name anybody, but I'm just saying, how should they manage a relationship with a founder that comes with a second, third?
I think so. You have brought a very important part, that what happens if things are not going in the right way. And that is not necessarily always because of, in this example, we are talking about the market circumstances. There are other times.
Yeah.
In that, the relationship has to be looking at considering the facts, right? What happened was due to the market. Founder was not at fault. So we had our full support to him. We were absolutely okay if that business could have gone to zero by then, and it was quite likely considering the COVID period was extended for quite.
And I don't think until June there was any relief given for debt, right? No. The debt was not clear what was going to happen until May or June, I think.
There was no clarity also how the things would supposed to come back. There was not a comeback plan. But there's a famous saying in our ecosystem that once you not hunt for unicorns, you have to look for more of cockroaches. And the cockroaches comes from the fact that survival instinct. That's where Siddharth comes, right? Survival. I mean, he would survive in any condition, and that was how he just helped himself to that. All the credit has to go to the founders, whether Siddharth or anybody for that matter, because that's the truth. Ultimately, if you are the jockey on the horse, you need to know where to, win the race. From far, the investors are betting on the, the jockey.